Financial results for 2025 achieving pre-tax profits of £6.7 billion, representing a 12% increase compared to the previous year. Total income also showed strong growth, with revenues rising by 8% to nearly £20 billion. The company's share price reached a 12-month high and has more than doubled over the past 2 years, reflecting sustained investor confidence. The strong performance was driven by growth across core business areas. Customers increased their use of savings, deposits, and borrowing products, alongside higher engagement with other banking services. Other operating income rose by 9%, while net interest income increased by 6%. These results were supported by continued investment in innovation and by strengthening customer trust in the business. Looking ahead, the economic outlook for 2026 is expected to remain resilient but slower in terms of growth. GDP growth is forecast at approximately 1.2%. 2 additional base rate cuts are anticipated during the year. Unemployment is expected to peak in the second quarter before gradually declining. While some households and businesses continue to face financial pressure, overall financial resilience has improved. Around 60% of households increased savings and reduced debt over the past year, indicating stronger balance sheets and the potential for higher future growth if confidence improves. The business plans to support economic activity through increased lending, with at least £35 billion expected to be provided to corporates and small and medium-sized enterprises across the UK, while continuing support for retail customers. Despite recent global uncertainty, investor confidence in the UK remains strong. The country benefits from resilient households and businesses, as well as globally competitive sectors such as financial services, advanced manufacturing, and biotechnology. International investors, including those reallocating investments away from the US, are increasingly viewing the UK as an attractive destination. This trend is expected to continue as investors seek diversification. In addition, upcoming government policy measures such as infrastructure investment, planning reforms, and blended finance initiatives, particularly in housing, are expected to further improve the UK's investment environment. While overall growth is still projected to be moderate in 2026, there is potential for a shift toward stronger growth if coordination between government, industry, and finance improves. There has also been increased engagement in investment products, particularly among younger individuals. Approximately 40% of newly opened ready-made investment and pension products are held by people under the age of 35. Of the roughly £200 billion managed on behalf of customers, 21% is currently invested in the UK, with opportunities for this share to increase as new products and policy changes are introduced. Regarding taxation, recent budget measures provided greater stability and reassurance to financial markets. The current focus is on enabling households and businesses to utilize their financial capacity to maintain spending, hiring, and investment. In addition, the adoption of artificial intelligence is viewed as a significant opportunity to enhance productivity and long-term economic growth.